going to move on to Ruby's question. She says, this is hypothetical, but say I have the money for 20% down on a first home, but I could get a VA loan with 0% down. Should I put the money down on the house, or should I put it aside for unexpected costs or invest it or something else? Are there any unintended consequences here?
Yeah, this question was a little bit easier a couple of years ago, right? When we had mortgage interest rates at 2.5%, 2.75%, 3%, it was a little bit easier to kind of walk through some mathematics here. Interest rates aren't as kind as they were a couple of years ago. Now we're seeing mortgage rates 5.5%, 6.5%, 7%. And so there's a very significant opportunity cost when you think about down payment. If I put 20% down, that means that my payment will be lower, I'll be financing less, my interest cost will be less. If I put less down, then my interest cost is going to go up, and it's going to go up by whatever my interest rate is. So I have to think through that arbitrage. Now, Ruby, I was tracking with her question really, really well, Brian, until right there at the end where she said, or should I put some aside so I have some for emergencies and contingent? That is one of the number one problems that I see first-time home buyers make, is they get so caught up in getting to the down payment and saving all that money, that they literally take all of their liquidity, all of their capital, and they try to get this down payment so they can get on the home ownership side of things. And then they get the keys and they walk into their house for the first time and they're like, uh-oh, I've got no cash. I can't put blinds on it. I can't go buy the lawnmower. Uh-oh, what do I do? I am always a staunch advocate that if you're going to buy a house, you need to have a contingency reserve fund for all the things that come along with home ownership. This may be part of your emergency fund if you have a fully built emergency fund, or it may even be a separate fund for first-time home buyers for all the things that you didn't know that come along with home ownership.
This is one. I first of all, I'm going to sound like a politician. I hate hypothetical questions because everybody has different variables. I'm sitting here listening to Ruby ask this question. And I'm like, man, it so depends upon where she is in her financial order of operations. But Bo did say, Ruby did give us enough to where you're like, oh, okay, she's not there. Because there are, if you had flown through the financial order of operations and moneyguy.com/resources, if you had your emergency reserves all loaded up, that's what this windfall, obviously, if you have 20%, that means you have a big chunk of money that came your way. And we've even had friends of the show who, a family member, or they sold something, or they came into some money, and we've had this exact situation present itself to us. And what I saw, and I've even shared this because I got a lot of hate for it. I'll tell you two scenarios. We had a friend of the show who's a younger person that came into a windfall money, and then I had, back when I used to teach a Sunday school class, I had a widow who came up to me right at the end when she found out what I did for a living after she'd known me for a little bit, and she goes, I inherited this life insurance policy when my husband unexpectedly died, and she still had kids in the house, and she goes, and everybody told me, go pay off your house. And, so it's a little different than what Ruby's presented, but it's still a very similar scenario. And I still remember she's like, I made the worst decision as I went and paid off the house. Now I can barely put groceries on the table because I don't have a cash reserves. I don't have, if the gutters need to be replaced, the roof needs anything. I cut it too close. And now I'm having trouble just covering my living expenses. So this is the same thing. Ruby's, it's just different. This is a younger person trying to buy their first home. And if they're thinking if I have 20%, because we had that other person that's come to us that they had a family gift or something that came. They put this down payment on the house. But then now they can barely afford to do anything. They're not funding their Roth. They're not doing, because they just used that money. They thought that was a healthy decision. I think the actual real answer is a balance through the financial order of operations, is because you need to make sure after you buy this house, whether it's a 3% all the way up to a 20% down payment, that you still have enough money for cash reserves. Because what happens if you lose your job in month 3 after you bought this house? You need to have the money to cover that. So it might be 3 months, it might be 6 months. You need to have emergency reserves taken. And then fast forward, what if this person has 0 investments to their name and they have 20% and they could get this mortgage, say this is a 33-year-old person, doesn't have any investments in their name, but came into this windfall. maybe they need to put down 5%, but then have cash reserves, but then they can they still need to fund a Roth IRA because you got to get some money working for the future, so you can have a Roth IRA or something like that. So there's a balance here. That's why I hate answering a question with a question, but there's just too many variables, and that's why hypotheticals can get you in trouble, and that's why I can give you good general advice, but when you get to the point of something like this, you might want to, really go through a system like the financial order of operations to help you allocate each of those next dollars, because that will at least allow you to kind of go through here and figure out, have I done the Roth? Where am I at on paying this down based upon where I am from an age standpoint as well in my goals?